Good afternoon. Welcome to Tuesday Rundown video. Today is Tuesday, 15th of June, 2021. We'll talk about a couple of the market news today, what you should be watching for tomorrow. And then lastly, we'll talk about some of the actions that we took today. So last week on Thursday, we shook off inflation concerns because we believe these are transitory due to supply constraints that we're currently experiencing. We got news over this weekend from China that they are having to shut down many big seaports in Guangdong province. This will cause shipping delays and thus will lead to higher prices. I think we will continue to see higher prices even until later this year due to the slowdown in transport. But again, this is because of that supply constraint. So even if you see into later this year, September, October, if we still get high inflation reads, market may react negatively, but you know why. So that is a risk that you need to consider. Another risk that you have to consider as well is the recent news, and I think this is pretty concerning, about the reopening process in China. So we know that the Chinese version of the vaccine, I don't know the name, but the current vaccine in China is only 50% effective. But that's against previous variants. We don't know how effective that vaccine is towards the new Delta variant, which would we believe would be less than 50%. So it's not very effective. So this affects the reopening in China, and certainly that is a risk to the market that you do have to keep in mind for now. Next, we'll talk about what's happening here in the United States, and particularly tomorrow, what you need to watch from the Federal Reserve. So remember, there is an event tomorrow afternoon at 2 p.m. The Federal Reserve will release the FOMC meeting minutes, which is kind of like a transcript from the meeting. The meeting took place today and will take place also tomorrow, will conclude tomorrow. After that, they release the minutes. And then after they release the minutes, Federal Reserve Chairman Jerome Powell will come out and do a Q&A, question and answer session. So remember, the Fed is not doing anything outrageous. They are not going to announce raising of interest rates. They are not going to announce tapering of bond purchase. This is too soon for that. In terms of interest rates, nobody expects any rate hikes until 2023. We're not even certain that they will raise interest rates in 2023. So that's the expectation for now, that in 2023, the Fed will raise interest rates. Although, again, they have not said that they will do that in 2023. The other thing is tapering of bond purchase. So the Fed is buying, I don't remember, either 120 million or 120 billion dollars of bonds every month. Market expects that at some point that will come to an end. Market is expecting beginning of next year is when they will stop purchasing bonds. Again, they're not going to say anything about stopping bond purchase tomorrow. So that's not a risk. But what the market cares about is whether the Fed would start to talking about stopping bond purchase or tapering. Yes, that's the phrase, talking about tapering bond purchase. So that's something that you want to keep an eye on. Goldman Sachs economists there say that it is too soon for the Fed to talking about tapering, even though some Fed officials would like to begin the process already. So officials at the core of this matter, including Governor Lael Brainerd and New York Fed President John Williams, they do not want to begin this process. They agree together with Chairman Powell that the labor market has not yet come far enough for this process of tapering bond purchase to begin. They continue to expect that, the market continue to expect that Chairman Powell, will start hinting about tapering in August, and they will make a formal announcement in December and start tapering at beginning of next year. Again, this is the market's expectation. Federal Reserve has not said anything about tapering bond purchase yet. Currently, at the moment, so that would mean last month, most recently, Chairman Powell says that they have not started thinking about tapering. So, currently this is what the market is trying to guess what the Fed is going to do. So that is something that you want to watch out. Something else that the market will pay attention to from the FOMC minutes, and certainly the Q&A session that Chairman Powell will do afterwards, is any changes in the inflation forecast. Remember, we got 5% inflation this month and last month. Right now, the Fed is in the camp that this 5% is transitory due to supply shortage and pent-up demand, and the market started to believe the Fed last week. A market will be watching particularly 2023 inflation expectation that the Fed, the FOMC minutes will provide tomorrow. The Federal Reserve's officials currently expect core inflation to run at 2% in 2022 and 2.1% in 2023. If the Federal Reserve starts to acknowledge the current inflationary pressure and thinks that these pressures will persist into 2023, that would be the indication for them to start raising interest rates in 2023. So market will certainly be watching that, and we think that that's something that you should watch too. Here is another risk that stands for tomorrow's FOMC meeting and the Q&A session that follows. It is important for the market, for the stock market, that Federal Reserve Chairman Jerome Powell stay the course during that Q&A session. There will be reporters that heckle Powell about inflation data, especially the recent, consumer price index running 5% for the past 2 months. Chairman Powell needs to assert strongly that these data are anomalies and should be ignored. If Powell slips and says we're going to look at that, that would be, kind of a breakdown moment for the market. And I think if that happens, if Chairman Powell kind of, lets loose, then market will freak out and will probably be down for a couple of days. So this actually leads into our next segment from Mad Money on CNBC yesterday. This segment is called Off the Charts. So I'll just kind of pull it up and we can watch together. It's relatively interesting, so let's watch that.
Tonight we're going back to the well because Williams has a new pattern he wants to highlight. Last year we talked about that 4th of July trade, how you can usually make good money buying the S&P 500 shortly before the holiday and then selling a few days later. Williams still likes the 4th of July story, but before then, there's usually a late June swoon. Think of it as the pre-4th of July play, and that's what we're going to talk about tonight. Williams has been at this since the 1960s, and he's found that stocks tend to get hit near the end of June, ranging from a modest dip to a substantial dive. And that's why he recommends selling the S&P 500 towards the end of the month, and then maybe buying it back a few sessions later. You don't have to short the market, but if you're nimble enough to trade, this might be a good moment to try to sidestep some pain. So when would you sell? All right, take a look at this. What I'm about to show you is almost science fiction. Take a look at this chart, which shows how you would have done historically if you sold the S&P on each trading day in the second half of June, assuming you closed out the trade 4 days later. What Williams finds is that if you sell in the last week of June, you typically lose money. The second to last week is when you ideally want to ring the register, or again, if you're so inclined, you can go short. In particular, you would have seen the best performance selling the S&P on the 8th or 9th last trading day of the month. In 2021, write this down, okay? It means selling either this Friday or next Monday, the 18th or the 21st. You got those dates? Friday or Monday. I need you to write that down because I think it's going to happen. If that's the sweet spot to sell, how long before you swap back in? All right, check out this table. Looking at the last 22 years, if you sold the S&P on the 8th to last trading day of June and then bought it back on the first profitable opening after 3 days, you made money how often? 60, 50? How about 100% of the time? However, if you waited a little longer and sold on the first profitable opening after 5 days, you actually made the most money, even if it only worked 21 out of 22 times. The only year that didn't work was in 2011. Come on, that was a crazy roller coaster market that kept being slapped around by European financial woes and the totally man-made U.S. debt ceiling crisis. We don't have anything like those two, so I'm not that worried.
Don't miss a second of Mad Money. Follow at Jim Cramer on Twitter. Have a question? Tweet Cramer. Hashtag Mad Tweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
You can be following our actions. However, let's finish with the latter part of today's rundown video. Let's talk about some of the actions that we took today. Today, we added back the position that we took off from GM last week. So remember, last week we sold some GM
to make you
at
money.
higher prices.
I'm here to level the...
This week we are buying some of that back. So we also added Moderna, Citigroup, as well as initiating a position in Nucor. This is our re-entry in Nucor after last month we realized a 30% gain in the stock. We believe the steel super cycle is far from over, and Nucor is a must-own stock in any portfolio. Another stock that we're eyeing is Freeport-McMoRan, down more than 5% today on the drop of copper prices. If this continues to drop tomorrow and the day after tomorrow will be a buying opportunity for us. We think we're bullish on copper, and certainly Freeport-McMoRan as a copper producer, we believe that drop in prices will be buying opportunities for us. So that's it for today's video. Remember, big event tomorrow will make or break the market. We'll certainly produce a rundown video after that. I think you should be watching, or if not, you can watch our rundown video afterwards to kind of try to stay the course with the market. So thank you for watching, and we'll see you tomorrow.